In this presentation, we will calculate targeted net income. Our data is going to be up top. We're going to use the same worksheet that we've been working on to calculate the contribution margin per unit, and the break-even amounts. We don't need to have all this information to calculate the targeted net income, but it's useful to see it because it's a similar type of calculation. All these things are related. In other words, when we do need to consider the types of calculations to get down to, for example, the contribution margin per unit. We're going to be using the contribution margin per unit, same type of calculation we had in a prior presentation from this data set. And when we considered the targeted net income, we're going to use a similar type of calculation as the break-even point. So the reason I want to put this here is so you can look at these items and say, this isn't a new calculation. We're not doing something different. We're just basically taking the same concepts that got us to the break-even point. How many units do we need to sell in order to break even? What's the dollar amount that we would then have in order to break even? We can use that same item or that same concept with targeted net income, very minor adjustment to it. So let's do that in our worksheet down here. We're going to add the new item, line 42. First, we're going to consider the units that need to be sold to get to the targeted net income. Now note, again, this is going to be the exact same type of calculation as our break-even points. So it's going to be the same concept as our break-even points that we saw before. We calculated the break-even point in terms of units, and then the break-even point in terms of dollars using these two methods. Same concept down here. We're going to start with the break-even point, or not the break-even here. We're going to do the targeted net profit amount. How many units would we need to sell to get there first, and then we'll talk about in units, and then we will consider in dollar amounts in the same fashion. So we're going to start with the fixed costs as we did with the break-even point. The fixed costs are going to be what they are. They are what they are. If we go to our data all the way up top, 153,900, you can think of it like the rent doesn't change no matter how many units we produce. The rent is the rent. It is what it is. Then we've got the targeted income, and that's going to be given in the data set. So I'm going to say this equals this number. Now, what does that number mean? What does it mean, targeted net income? It means how many units do we have to sell to think that we're going to net this amount. We're not talking about taxes right now. Taxes complicate the situation. We're just going to say this is going to be our net income. What are we going to net? How many units do we have to sell in order to net 100,000 of, in essence, net income? We're going to calculate the net income using our contribution margin income statement. But it's the same thing as a normal income statement. It's just easier to do these calculations with breaking them out between variable and fixed costs. So then that's going to be, we're going to add those two up then. I'm going to use the sum function to do so. So the 153.9 plus the 100 gives us the 253.9, and that's just going to be the fixed costs plus our targeted income. And then we're just going to do our same type of thing that we did. We're going to take the contribution margin per unit. So contribution margin per unit. And that was calculated up top. We made those yellow. It's going to be, of course, the sales per unit minus the variable cost per unit. Remember, per unit, not taking this number over here, the total, the per unit numbers. And that's going to give us this item. These are all dollar amounts here. So if we highlight all these, I can emphasize that fact by saying format the cells and put the currency there. We're talking dollar amounts. I'm going to make this a little bit larger so that we can then see it. So there we have that. And then we got the units that we're going to have. So the units to achieve the target. So we're going to take our targeted amount there, the 253.9 plus the fixed costs divided by the contribution margin per unit. And so there we have it, and that should be it. Now note, it's the same kind of calculation, and it's the same kind of concept because we're talking, this contribution margin means how much we're earning after the variable costs for each unit sold. And then last time we divided that into the fixed costs to see how many units we would need to sell to break even. Well, now we're just saying, well, how many units would we need to sell not only to break even, but add to that what we want to earn, the profit on it. So we add those two together. So we're saying this is the net income plus what we want to earn. Here's our 27 cost or profit per unit over variable costs, not taking into consideration the fixed costs. We're going to divide that into the fixed costs and the target net income. That'll give us then how many units. This again in units, not dollar amounts. We would have to sell this many units in order to achieve the clearing of the fixed costs and the profit of the target 100,000 in this case. So let's make this one look a little bit nicer. We'll make it blue here. We'll add some of these items and we'll make this black and white. And so there we have that. Now we're going to do the same kind of thing. We have two methods in terms of what's going to be the amount of revenue. Obviously, if we have this 9477, we could take that and multiply. That's how many units we have. We're going to take that and multiply it times the sales price, and that'll give us our sales in dollars that we're going to have in order to achieve the revenue. In other words, the top part of the income statement, whether it be normal or the contribution number, our sales amount, and then we're going to decrease that by the expenses to get to our target, which will be the 100,000. So I'm going to underline this while I'm here. We can underline this one. We can underline this one. So we're going to do method 1 and method 2 as we did with the break even for the dollar amount now. So we're going to achieve the targeted, let's say, net income, and we're going to say the units. So we'll start off with the units up top that we've calculated up top. And we're going to say that this equals this 9477. And then we've got the sales price per unit. So the sales price per unit. And I'm going to say that that's going to equal what our sales price is, which we have up top. Again, not the contribution margin, not the variable cost. This is what we sell them for, the $57 per unit. And so there we have that. Again, this is dollars. So this is going to be in dollars. So we can say this is dollars and not units. And then if we multiply that out, we're going to say this is how many units we need. And this is the dollar amount. So this is going to be the sales amount. So these will be the sales line. And then that's the amount to achieve targeted income. So I can just copy this down here. Targeted income, we don't need method 1. And so there we have it. We're going to go ahead and underline this. We can double underline that. We can make this blue. I'm going to make it blue. And I'm going to put the grid lines here. Now note I moved this one over here just so I had some space, even though it went over. Now I have this grid line. If you want to get rid of that grid line there, just to make it look nice, you can go to the Home tab, Alignment, and then we can merge those cells and then bring it back over to the left. You want to be careful to do that. You can also eliminate the grid line in the middle if you'd like to do that. So in other words, it's probably safer not to merge the cells. And if you wanted to mess with the grid lines, you could have to remove the grid line and then put a box around the whole thing, like so. Then you won't have that grid line sitting there if that's important to you. Or you can so a couple different ways you can do that just to make it look nice if it's for presentation purposes. And then you can highlight this. We can make this black, white. We can make this a little bit larger so we can see that last item. And then we're going to take a look at method 2, and we're going to start with the first method. You got to know both methods because the test questions might have it, and also it's good to be able to just think about these numbers and how they interact with each other, how they're related to each other. So we're going to say fixed cost and targeted income. So that's what we calculated up top, fixed cost and targeted income. So we're going to say that's going to equal the 253,900. And if we just had a problem that didn't give us all of the information, they would give us basically this number, and then possibly the contribution margin ratio. And so we'd have to take, okay, the fixed cost plus the targeted net income is this number, and then we need the contribution margin ratio. So this is the contribution margin ratio. And this is the one that's going to be most confusing to people because it's basically a ratio, a percentage. After you do it many times, you'll kind of understand why the percentage works, but you just got to memorize this formula until that happens. So we calculated this 2 ways up top. So if we scroll up top, we see the calculation in terms of the 47 we calculated on the totals, sales minus variable cost or contribution margin over the sales price, and we calculated it here on a per unit basis, the 47 again, and they could give us the sales per unit, 57 minus 30, the 27. 27 over the 57 gives us that same 47%. Or they might just give us the 47% so that we can't use method 1. So in other words, if I say this is the 47, if they just give us the percentage, I can't use the first method, and we have to just basically know this formula then. So now you'll see it's a 0. Why is it a 0? Formatting. We're going to go to the home tab. We're going to go to the numbers. We're going to increase the decimals. There's the decimal format. We'll then convert it to a percentage with the percentage item here. And then we'll divide this out. So we're going to say, all right, this equals the 253,900 divided by the 47%. And that's going to give us this 540,213 matching this number here. That's going to be the amount to achieve the targeted income. If I misspell anything, I apologize. We're doing the input fairly quickly. I'm going to make this blue. I'm going to make this the items formatted just for practice on the formatting, just to get good at the tables here. And again, we can use this method if we so choose to remove the border and then put a border around it like that if we want to make it look nice or nicer. That's not quite necessary, but there we have that. Let's do that one more time. We're going to remove the border, and then we're going to put the border around the entire thing. Okay, so now we could test this just like we did with the break even up top. We could use the same type of test format. So we're going to test the targeted net income. So test target net income. And then how do you do this? We want the bottom line to be the 100,000. That's our profit. That's our net income. That's what we want it to be. That's what we expect it to be. We're going to use a contribution margin type of income statement in order to test it. So we'll have the sales minus the variable cost is the contribution margin minus the fixed cost. So this is always the CVP type contribution margin type income statement that we want. So we're starting sales just like we would with a normal income statement. Then we're subtracting the variable costs. So it might be variable cost per unit or variable costs total. We'll have both because they'll be easy to use oftentimes. That's the point of this type of statement. And then we'll have the contribution margin, and then we'll have, and it might be the contribution margin per unit, total, percentage, that we're going to have on the other side, and then fixed costs, and then net profit, net income. All right, so then the sales item that we're going to have, we can first break it out into a unit total as we did before. We could say, okay, per unit items. And so what's the sales price per unit? That's going to be in our data up top. We also have it here. So here's the sales price per unit. Variable cost per unit, I'm going to say this equals, and we're going to go up to our variable costs. We have it here. It's going to be the similar worksheet. And then we can calculate the contribution margin per unit equals this minus this. So 57 minus 27. Notice it says contribution margin here, and we might have the contribution margin per unit, the total contribution margin, the contribution margin percentage. Oftentimes, we're not going to write all of those here. It takes too much room. So just note that you got to consider that when you're dealing with your worksheet. We're probably going to be working all of them. And then we have the number of units. So the number of units we calculated up top that we're going to need 9,477 to clear the fixed costs and make the profit of the 100,000. So we're going to say this is what we're testing, those units. And then we've got the total, which we're basically recalculating. So note that this is the per unit cost. This is the units. This and this are going to be in dollars, right? So we're going to format this currency. Let's add the dollar sign to remind us. This is in units. So now we're just recalculating method one of the units times the dollar amount per unit, giving us the total dollar amount, or the $57 times the 9,477, giving us the 540,212. If I remove the pennies here, we'll just remove the pennies. And then we're going to have the same amount of units. So we're going to say same units on down. This is the point of the statement. We can do the same here for variable costs. 30 times the 9,477. Again, I'll remove the pennies. And then we're going to say the 27 times the 9,477. Or we could calculate this as this number minus this number, sales, total sales minus total variable costs. And so there we have that. And then we're going to have the fixed costs, which are like the rent. They don't change. That is what it is. So we're going to give that into the data. So the data up top said fixed costs were 153,900. And the difference, of course, between the 153,900 and the fixed costs is 100, our net profit, the targeted net profit. So this is our calculation to basically double check that the net profit is indeed what we want the net profit to be in accordance with our calculation. So we can clean this up a bit. We can make this blue, make this nice and blue. We can add the grid lines if we so choose. We can add this item up top, making this black and white. We can center these items up top and look something like that.